let's look at the profit statement, also known as the statement of profit or loss, under marginal costing and then under absorption costing. So we start with the one for marginal costing. So this is the format. This is how it looks like. Yes, this is how it looks like. So we start with sales. You put here the value, then we less the variable or marginal cost of sales. You should note that we less cost of sales, but we use the variable value, the variable values. So we start with the opening stock variable cost. We use the variable cost when we are calculating for opening stock. Then we add production costs, and like all these are under production costs, they make up the production cost. So you can decide to do this from aside and then just bring the total and you write it as production cost, or you can write them here. So we add production costs, and these are the production costs. We have direct materials, direct labor, direct expenses, then the variable production overheads. That is it. We get it. Then we get the cost of goods available for sale. We get the opening stock plus the production costs. We get the cost of goods available for sale. Then after we less closing stock, it is also valued at variable cost. Closing stock, so this minus this, what you get is the variable cost of sales. Then after that we add other variable non-production costs. So here we have things like variable selling and distribution, then variable administration. So we get this, we add these, and we get this. So after that we get the contribution. How do we get the contribution? We get sales minus total variable cost. So this figure for sales minus this, like the total of all these, minus this. Yeah, what we get is the contribution. Then after that we less fixed costs. We less fixed costs, and here we can have fixed production overhead, fixed selling and distribution, then fixed administration. We less. Then after we get the net profit, which is contribution minus fixed cost. So this minus this, we get the net profit. So that is the format of the profit statement, or the statement of profit or loss under marginal costing technique. Then let's look at the one for the absorption technique. Sorry. So for the absorption technique or absorption costing, this is what we have. Sales, the value, then we less cost of sales. We start with opening stock, but at this time we use full cost, meaning we add both fixed cost and then the variable cost. So we use the full cost, all of it. Then we add production costs. I said these are the ones under production costs. These are the ones that make up production cost. So it is also at full cost, not at variable cost like the way it was in marginal costing. So direct material, direct labor, direct expense, production overheads. Then we get the cost of goods available for sale. So this plus this, we get the cost of goods available for sale. We less closing stock at full cost. Then we get this sales minus the cost of sales. We get the gross profit. Then after we less non-production costs. We have things like selling and administration, selling and distribution, then administration, we less them. Then what we get is called net profit before adjustment. And in case we have an under or over absorption, if it's an over, we add it. If it's an under, we subtract it. Then we get the net profit. So this is the formatting of the statement of profit or loss using the absorption costing technique. Yeah. So we also have what we call the reconciliation. Reconciliation of marginal costing profits with absorption costing profits. So you'll have to confirm whether the things that you've done are correct or wrong. So you can only do this by reconciling. So reconciliation of marginal costing profits with absorption costing. So the structure of the reconciliation sheet. So it has two formats. You can either use this or that. So they all work. We have the marginal costing profits, the profits that you get using the marginal costing method. Then you add the fixed production overhead included in valuation of closing inventory. We shall see how to get this. Then what you get should be equal to the absorption costing profit. You've used the marginal costing, then you add this. What you get should be the answer you got using the other method. So you should be able to get the absorption costing profit. Or you can use this, the absorption costing profit, you less the fixed production overhead included in the valuation of closing inventory. What you get should be the answer you got when you use the marginal costing profit method. Yeah, so that is it. We shall see it in the next video in an example. Thanks for watching.